All right, guys, I woke up early because I couldn't do it anymore. In the past few years, I would say, we've gone through some big moments like this: 21% down, 35% down, 27% down. Okay, but now we have a triple divergence on the RSI. We see that this is lower, this is lower, this is lower, right? We have that triple divergence formed on the RSI, and this is something that can get really, really serious. And at the end of this, it really looks like we almost have like 100% chance to really see this thing start to end up in that downward direction and go down towards 3,500 for the SPX, maybe even something like 350 for the SPY. So we need to talk about it because this is pretty serious. And if you're not aware of this, you can lose everything, maybe even in the next couple of weeks. So let's get into it. Did that make you nice and bearish? Did that make you feel bad that you're still in calls? Did that make you freak out emotionally? Maybe you actually have puts right now and that made you ecstatic. And now you're not going to be able to sleep tonight. You're going to be looking at charts going, oh my gosh, maybe you're looking at the things that you want to buy. Or maybe it's not as bad as it seems. That's right. There's some key things to understand about the beginning of that video, and that's the fact that there are some key things that I leave out, and if I leave those things out, I can make the argument look almost 100%. But there's something we say on this channel, and there's a reason that we trade like water, and that is because the market is never 100%. And if you think that nothing bad can ever happen at any moment to the market, I highly suggest you read The Psychology of Money. This has truly been a great book. It actually lines up with, I would say, almost everything that we talk about on this channel. So it was a very cool read for me because I love psychology and I love looking into these kinds of things. And when it lines up with how I think about markets, I really, really like it, but it puts it in better words. Highly suggest you get it. It'll cost you $11 on Amazon. So there's a big reason that you're noticing that something that I always have up is not there. And that's because I was trying to bait you guys here. I was trying to see how your emotions would react if I told you, hey, the stock market is absolutely with 100% confidence going to crash over the next, say, 2 weeks. I was going to say 6 months, but 2 weeks hits different. So that could happen. I think that is a very low percentage chance to happen. And I left out the MACD to show you guys something that made it look a little bit more 100%. The MACD or the RSI showed you that. The MACD did not show you a divergence at the same time as the RSI. We don't see any divergence up here on the MACD. The MACD has not even crossed yet. It's the lagging indicator, so this is worrisome. I'm not saying this isn't bad, but I'm just saying, hey, maybe we need to treat this Saturday as an opportunity to say what people do when they get a little bit more emotional might not be the correct thing. It might be the correct thing, but what's the bigger probable thing? So at this moment, I left out some data because I was trying to give you guys a little bit of a bait to see how you would react when saying stock market crash, because I think people are pretty addicted to that when they see a red day in the market. The next thing we're going to do is discuss the reality of how people make over-emotional decisions. And we're going to talk about that using our bell curve. The next thing we're going to do is go through that crash case. The next thing we're going to do is the buy the dip case, because it could go in either direction, right? And a lot of the percentages are starting to point in the upward direction still. And then we're going to go over something you should never do. We're going to talk about that towards the end of this video. So without further ado, I'm sorry about the bait. I hope you weren't tricked by it. I hope you didn't get over emotional. I hope someone didn't S their P's out there, but let's get into it. So unfortunately, no, I'm not going to be the guy that tells you there's a 100% chance for the stock market to crash or a 100% chance that the market is going to rip and see some kind of squeeze. I'm sorry, but people who are talking like that most likely do not understand how markets work, and they most likely are wrong a lot of the time compared to being right, because they seem to be emotional people if they are calling a stock market crash right now. Or they're just looking for YouTube views. So something we're going to do is actually give you something very, very helpful here. And that's understanding your emotions during times like this. And what we're going to do is we're going to put one big sad face emoji over here, right? Absolutely sad, right? And then we're also going to put a kind of guy who's kind of in the middle. Let's find a guy who's nice and easy, maybe in the middle, maybe kind of like this, like skeptical. Let's go with skeptical, okay? He's just kind of like, okay. So as of this moment, we're going to pretend that this is the bearish side, right? Bearish side, this is the bull side, right? So we'll say bull here and bear here, all right? Right? Bull and bear. So for the time being, we can notice that this is a 68% zone. This is what our weekly or monthly expected moves show. This is what daily expected moves show. And then if you bring that out to another standard deviation, you get a 95% zone. So when you're in that 95% area, you have a 95% chance to close above those areas if you go below them, or close below those areas when you go above them. Very, very key. But the people who have emotions, right? People with emotions overall get either, way too, say, happy or way too sad when they see something crazy. And we'll take this as bearish or bullish. What we notice here is that at this moment for the stock market is actually in this area. The stock market is actually within that 95% zone, which means it's very good to hold up there till the end of the month and we'll get new updated monthly expected moves, but people are behaving like it is absolutely terrible and there is a 100% chance for a crash, when really the percentages are still saying, hey, there's still a chance that we turn this thing back around. And if we see reversal signals in here, man, I'm going to be glad that I was skeptical. But we can talk about that the other direction, right? Just a little bit ago at those all-time highs, everyone was saying, oh my gosh, this is the new bull market and we are going to see new all-time highs up until 2030, which could happen. But if you're this guy, what is the benefit of being this guy who's just skeptical? Yes, at these times he is bullish. Yes, at these times he is bearish. But at those times he is also skeptical because he knows something that this person and this person do not. And that the market is bound to do crazy things. The market is never 100%. And so being aware of how the market can screw you over is a great thing, especially when you're in times where people's behavior is really dictating their decisions. Their emotions are dictating their decisions. There are most likely a lot of people taking big bearish bets right now. And maybe you should have a look kind of like this guy going, what if I see a reversal signal? Does that have the opportunity to bounce? And the answer to that question is yes, it does. It always does. So with where we're at right now, where would these people lie according to our monthly expected moves? And I know we only have 1 day left, and that should actually give you a hint of we have a 68% chance to possibly close back in that monthly expected move by Monday close. Isn't that crazy? And guess what? Volatility over here, if you look on the right side of your screen, was up by 15.95%. And we are going to discuss those bearish scenarios, but we're still getting through how people's emotions could be dictating what the things that they are choosing to do. Now, something important here is to notice that this person might be making those crazy decisions at this time, but really this person is right above them going, what if this creates a reversal signal? And that will really switch up the way that you're able to think about markets, because you'll be someone who's just a little bit more skeptical. When things are really bearish, you could say, maybe they're not as bad as they could be. And then maybe if I see a reversal signal, I need to be ready to react. Whereas this person would not be ready to react. They are willing to say this is a crash. And even if it starts to head up, they might even say that is going to fade again, just like it did the last time, right? So you see how that could be a problem. If this starts to bounce and bounce and bounce and take out this high, people could get caught off guard. Now, what about this guy at this time? Does he want to be very excited? Well, I think if you're probably on the inside and you know some information we don't, and you know that this thing's going to absolutely land at 600, maybe you could have this mentality. But if you don't know with 100% confidence and you just saw a big red day that curled down a 4-hour chart and looks like it could curl down this daily chart, you probably don't want to be this guy down here either. But this guy is more of the culprit here. And you guys remember that we were looking at this with this kind of face because we saw the triple divergence to the upside. We saw that divergence not only held on the first point, but held on the second point as well, giving that downward direction. So we were aware of the weakness could come. The big weakness comes. People get overly bullish, straight into really, really bearish. I know it took some time, but really, really bearish all of a sudden. And we're just going to stay very like this. We understand how it's bearish, but we are open to reversal signals. This is a display of how your emotions should be in understanding, giving yourself, even if I'm 99%, and I would say I would only try to be 95% bearish at all time, or 95% bearish or bullish during the correct times. But you need to leave that 5% room for you to have this skeptical look so you're aware and ready to react if something bullish takes place. So let's talk about how this thing could crash down. Hopefully you guys understand the point that I'm trying to get across here. It's this guy can lose a lot of money by saying, hey, I'm going to bet the house that this thing is going into a stock market crash right now. We're absolutely with 100% confidence going down. Well, if he's 100% confident, how confident do you think he is that this thing, if it starts to rip, he's going to hold on to those options? That's a big problem people go through. And hopefully this was an okay display for trying to get a point across of being skeptical of extreme bearishness or extreme bullishness can actually help you out as a trader. It doesn't mean I have to move money around. It doesn't mean that I'm going to randomly take calls, I'm randomly taking puts, but it does mean I can be aware of reversal signals at key levels below key expected moves. So what people are really at risk here? Well, the people taking the riskiest bets in this area, this is the people who will be extremely right, or extremely wrong, and extremely wrong. And these are the type of people that if they get 100% on something and they think that that's going to happen, but something is proven in front of them that goes the opposite way, they might even hold on to that thing. They might bet their house on it. They might not understand managing risk. They might not understand managing position size. And that's a big problem. And that's why there are so many benefits to be in this little skeptical guy up here who's saying, yeah, this looks like a big drop's coming, but just in case I'm wrong, I don't want to lose my house, so I'm not going to bet the house. I'm going to bet something I'm comfortable with that I'm willing to take as far as risk goes. So at this moment, we can see that the SPY is turning down. Right at the end of the week, SPY turned down, and it's very likely for us to potentially go to a weekly expected move. I used the topside move is actually from last week. This one's for this week. I made them for this video, but I wanted to show off this because we made the decision making up here for me was something I was maybe going to discuss. At this moment, we see that the market has turned down. We've taken out this low. What does that mean for us? Well, the 4 hours cross, we see that that is a high probability to test the low and go make a new one. And the weekly expected move is saying that that is within complete reason, within that 68% zone for the week. But we also have this monthly here that says, hey, you could gap up. So if this thing is going to crash down, you are going to see a daily cross. You are then going to see most likely a bounce at some point, but you will end up crossing down the MACD for the monthly chart. And that's going to be a big deal because that will actually be two forms of confirmation. That means we can actually go through something pretty serious, and that might be in the form of a bear market. So still be aware of that rip around behavior. But this is a way that we can actually see this curl down. But always keep in the back of your mind, even if we do start to crash, even if we do start to even see some kind of bear market, that the MACD does not have the divergence that is down here on the RSI. And there's always the opportunity that even that corrective, that overly corrective bear market could actually turn up into positive territory to actually create the crash signal at the same time on both indicators at the same time. And that's a big deal. I like my things to be at the same time. They are not. So I'm going to be very aware. And it's more just a reason for me to be like, don't ever get overly bearish or bullish, right? So the people who will be in trouble at these times overall look like the guy who's overly confident to the upside. If the bearish case was to happen, the person who would be in trouble would be the guy who's saying this has a 100% probability to squeeze here. And that's the person who would potentially lose money because they would see this cross and still hold that statement. And by the time it's down at lower levels, they could be 80, 100% down at those times. So what are we looking for the bull case? Well, the bull case, this guy would potentially really like, but maybe this guy is more interested in. Because this guy sees that monthly expected move. He sees that the market is going down. He sees the hysteria in the media. He sees the hysteria over on X. He sees that everywhere. You know who's giving into that? This guy. All right, so this guy, how would this thing overall become bullish? Because if this thing goes bullish, this guy might be overly confident and he might end up losing 80 to 100% by the time he actually sells. And that could be the perfect point where it actually starts to turn back down. So this guy is not a good person to be. You want to be that skeptical guy because if we turn down this week and even see this go all the way down to 540 and then we confirm back to the upside, we can see a daily divergence on your MACD and RSI at the same time, right? So if this takes place, ooh, we would see that. Ooh, we might see this. And we could see that all at the same time. And then this thing might be ripping to the upside. And a daily divergence has really liked to see some strong moves. Let me show you the last daily divergence that we did have on the SPY. It's right over here. So you see that this daily divergence was flat on the MACD and flat on the RSI. And that is what has overall projected us to the point where we're at right now. I mean, really, if we look at this from confirmation, we see that the market was able to grow 42% in a little over a year, say a year and a third of a year. So maybe like 16, 17, or I guess 324. Yeah, 16, maybe a year. Okay. So in a year, you were able to see extreme upside from a daily divergence. So what if we create that here? We could see a full potential year, maybe two, of positivity. We could see less than a year of positivity because I think there are still serious risks in 2025. But I also look into the behavior of traders, the mentality of traders, And at this point, people are so bearish that everyone, or at least most people, would be right if the stock market were to crash here. And so if that stock market were to crash, a lot of retail would be right. And that also is an indication that maybe we want to be more skeptic about it than we want to be one of these guys who are making those huge bets. Maybe we just want to see what actually forms down here. And if this is that daily complexity down by a weekly expected move next week, or maybe we actually experience some kind of bounce because there's some unforeseen news that comes out on Sunday, and we just see this thing gap up into its 85% zone on the last day that it can, which is Monday. And actually, sorry about that. That's a 68% chance to bounce into that zone, but 85% chance for the VIX, which is calling a bounce in the next 2 trading sessions. So what if we bounce on Monday? Bam, 68% chance to do so. What if we drop on Monday? Well, 85% chance that on Tuesday you're going to see some kind of bounce, some kind of green day. So let's just pay attention to it, and we're going to go into the shorter time frames to see if there is a likelihood for a bounce and what you're overall looking for on the shorter time frames to see down here if we're basing out in some way, just like we did over here. We're going to discuss that in tomorrow's video, so make sure you're subscribed. But I really wanted to show off the bearish and bullish cases by showing how this person is usually in the best spot. This person will go through the least amount of stress. This person will not risk their house so they can stay in the game. And survivability is like 80% of what playing the stock market really entails for a trader. Okay, so the bearish case is that this is rejecting off of the 200 and everyone's going to short this thing, and we are going to end up turning down on this MACD and we are never going to turn up. The bullish case is that we are going to turn down to this weekly expected move or experience some kind of gap and see support at one of those points to curl us back up and take us into positive territory, and everything's going to be dandy and we might actually see some kind of squeeze. Those are the kind of 2 scenarios that I'm paying attention to, but I'm always in that middle area where I'm just a little bit skeptical. Now, I wanted to talk about at the end of this video something you should never do. And that is something that I wanted to discuss as far as what we talk about sometimes during live video. I have even thought about just not discussing when I'm buying or selling something because we are so different. Reading this book, The Psychology of Money, you're going to notice a whole chapter based on this. We are different people. We make different decisions. We think about money differently. Whether it's $1, whether it's $100,000, we would think about things differently. There are too many variables for you to try to follow something everyone, like one person, is doing and be successful with it. And I even changed stuff up this week, and I let people know I was changing it up this week, and I wanted to assume some more risk to see how my emotions would react. So right now, I am still in calls because the management of my trade that I have decided on, I gave myself 2 ways to do this thing, and I wanted to be open to building the position and then looking for the divergence to scale in one more time if it heads in the downward direction and confirms back up. And I have my ways for if I want to get out. But you don't know any of those exact things, so it is very difficult to do. And the chances that you are going to follow a trader who is some guy on the internet and be successful at, say, a 90% rate, like a high rate, is just, you're more likely to get rich off a stock market crash. And I'm just going to be genuinely honest. The likelihood of you finding someone with a 90% success rate, or even an 80% success rate, or even a 70% success rate in the market is very, very low. So, and also, you have to be getting all the information from them at all times to see what they're doing. So that is a recipe for disaster. The thing that will really unlock you as a trader is getting yourself to understand, and more so be that guy who's just a little bit skeptical when everyone's screaming crash, 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 and a little bit skeptical when everyone's screaming squeeze, 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 or skeptical when people are saying all-time high, all-time high, all-time high. Just give that little eyebrow look up and say, what do I think? The important thing is, what skills do you have? How accountable are you? How are you managing your money? What is the risk that you want to assume? That's what matters. And then we can use this channel as a way to discuss things and how this market can move over time. Right now, that discussion is, if the daily MACD does turn down and never turns up again, yeah, you're going to experience a crash. But if you see this turn down and then curl up off that weekly expected move and you see divergence down here, don't be overly bearish, because that is a signal you usually see at major bottoms that potentially have room to grow for a long ass period of time. And this is something that can kick you out of the game. And survivability is something very, very important for a trader. And that's why we manage risk and trade like water on this channel. This might have come across very belligerent, very, very blunt, but I want to get that across to people that you need to understand that being in more of a bearish, slightly neutral stance right now is a very good thing to be. But if I see confirmations down and those things continue to head down, I can be prepared that this market is still going to crash. But if I see some kind of divergence here on the daily scale, I need to be aware, because that is a major reversal signal that can cause huge squeezes in markets. So let's pay attention. But I wanted to show you guys at the end of this video the weekly expected move. I did update that just now, 569.88 to the upside, 541.44 to the downside. So now you have a key level to pay attention to for if we're going to go down and make that divergence, right? Or if something really bad's going to happen. So we're going to go into the shorter timeframes again on Sunday, right? We're going into those shorter timeframes to see what we're looking for here. And if we get lucky and we get reversal signals here and not some kind of V shape, well, then we can see maybe some signals that are leading us in a certain direction. And we will talk about that throughout the week. But for the time being, I want you to look at where that upside move is, 569.88. Very big deal to be at 569.88, because that is right around that 570. What has proven to be the troublesome level this whole time is 570. Whenever we lose it, bad things happen. Whenever we touch it, resistance comes in. So this is a big deal to take back 570. And here's the thing, the volatility, the VIX, this thing over here is up by 15.95%, suggesting in the next 2 trading sessions, you have an opportunity to bounce. And don't forget, just because that purple line is over the yellow line, that the monthly expected move does not end, does not update until tomorrow. And you have a 68% chance to bounce by tomorrow close and get above that line. Pretty crazy deal if it gets that right. But, you don't want to put too much into that basket, right? We want to be that neutral guy and say, ooh, that would have to do it all in one day. Maybe that's not the most probable thing, but at the most, as far as price action goes. But as far as tomorrow goes, you have as far as Monday goes, you have an 85% chance of a bounce in the next 2 trading sessions. That includes Monday. The VIX is calling that. Okay, and then you have a 68% chance to bounce back into the monthly expected move by the end of the month. That's on Monday. That doesn't have to happen. You land outside of the moves 32% of the time. But I think it's very interesting that we have a weekly expected move that is almost directly on the monthly expected move. And I think Monday or a couple days into the week could get very interesting. I am leaning towards the bull side still, even while seeing this, because of the psychology of a lot of people out there on the retail side and on the bigger scale, right? Everyone seems to be very bearish, calling some kind of stock market crash or bear market right now. But for the time being, if we see a divergence, hey, let's keep a level head and be that neutral guy, because we want to make sure we're in the right move at the end of all this. Thank you guys so much for watching this video. I really do appreciate it. I know how this can break down now. I know how it would trick me and move back to the upside now, and staying in that neutral stance, staying in that mentality of I am never 100% right. Something could go wrong is what really can elongate myself in trading. What really can help me discover how time can really, or survivability can really keep me in the game and allow me to make money over time if I'm consistent enough with paying attention to behavior, with paying attention to signals at key levels. This is how you miss out on big moves, is you get overly bearish when a bullish signal pops up outside of an expected area, and then you're not ready to react. So my encouragement here is do your own research. If this curls down, yes, it can crash, but if it turns back up, you have divergence, and that has proven to be an extremely good signal to see some crazy bullish behavior over time. Thank you guys so much for watching. I know it was a different kind of video. I hope you did enjoy it. I am trying to give you something that will actually help you out when thinking about money. I actually will help you out when thinking about how you are going to trade from here on out, which will actually help you out in how to manage your emotions. So hopefully this was able to do some of those things for you. If not, please come to the live show on Monday. We can discuss these things further. If you have questions or anything like that, I totally am open to answering those questions as well. Thank you guys so much for watching this video. I hope you guys have a great weekend. Hopefully you guys didn't do anything on Friday or Thursday that makes you kind of ruin your weekend, right? Because one of the things in this book is never do something that is going to cause you to lose sleep. And it is a very good book. I highly suggest it. I think it will really help a lot of people out in understanding a lot of the things that we talk about on this channel. So if you got $11 and you got some time, you got the opportunity to learn something over this weekend. And maybe it's not even for me. Maybe it's this book right here, The Psychology of Money by Morgan Housel. Make sure to get that. But thank you guys for watching. I hope you guys have a great weekend. I will see you tomorrow. So make sure you're subscribed, and peace.